Hey guys, and welcome to my third week of my dividend portfolio. Now, I do say dividend, but the past couple of stocks which I've put in and bought have been growth stocks. But I think in hindsight, looking at it, I do need a couple of growth stocks in my portfolio just to push that growth and that reach. But the main focus of this portfolio is for the dividend income. Now, last week, the two main stocks which I did buy were for growth. Now, these two stocks were EHang and for NEO. Now, both of these are Chinese stocks and they both sort of revolve around electrical technology. Now, EHang is for electrical automated vehicles and the NEO stock is for electrical cars. Now, I had a bit of a problem with my account last week. I did go to buy £50 of the EHang, and because it opens at a different time zone from the one which I'm in, it didn't buy and I made a bit of a mistake. So rather than pull it out, adjust it and buy it at the price it was selling for, I decided to go for a different stock, which I did see a bit of potential in, and that stock didn't grow as much as what EHang did. So as you can see by this graph for the week, EHang basically doubled, whereas the stock I did buy has only gone up 15%. So I'm glad that I've got 15% with the stock I picked, but this just shows what I could have had instead. But we don't live on regret, and what I'm going to do is just go and pick some up now. Is it a bit inflated? Yes, but I do think gradually buying it will get a sort of medium price throughout it, and the more I sort of pick up during time, the more it will break down the price. So we're going to buy £50 of that, and we'll keep an eye on it throughout the year. This and NEO are two stocks which I think will keep growing, but throughout the year we can keep sort of seeing the price of it and just seeing how it behaves through more and more people sort of picking the stocks up. Now, if we could have a similar performance for next week compared to this week, I'll be very happy, and I do see myself picking up quite a few shares over this as long as it does sort of keep a stable rise. I do sort of see a bit of a negative impact on how quickly its rose coming up soon, and I do think it will go down, but I will buy into the dip and just hopefully level out buying at this high price. But EHang, the way it's set up, the sort of market it's going in for, it is the future. And this portfolio, I like sort of put a bit of future sort of impact involved. I like companies which are thinking and sort of preparing themselves for what sort of future we're having. The way we're sort of moving or working is going to change, and electrical will definitely be the way forward. So that's why we've gone for that. Our NEO shares did buy, however, for last week, and it has gone down slightly from last week. I didn't quite buy exactly a week ago, so it hasn't quite gone up, so down 7%. I think I'm down about 2 to 3%, which isn't too bad. I'm hoping sort of long term, like EHang, these will only be going up. As I believe the industries they're both in are only going to keep growing over time. And I think in this market, especially for your electric cars, it's Tesla and everyone else. And I do think this will probably be the better of everyone else. I do think Tesla is priced at the correct sort of point at the minute. And although it just keeps growing, it just thinks it's putting out less and less sort of margin for it to keep growing. Whereas I think this stock, being quite new, Chinese sort of production as well, it will only keep growing over time. And the final stock was the emerging market Vanguard ETF. That's not done too bad this week. It's sort of up about 2%. It's quite steady. That's why I wanted it. It was diverse. It gives me plenty of stock and it just gives me a bit more level in my portfolio. I have about 20% of my portfolio spread between 4 Vanguard funds, and I like to think they can anchor in my portfolio, just give me a little bit of a safety net, which allows me to go and pick a couple of different stocks and just to be a bit risky every now and then in my investments. The Vanguard sort of give me that base. I know with a lot of the leading investors, they like to have sort of a 20% in bonds. For me, the age I am, I believe bonds aren't really the best thing for me. So that's why I'm using these ETFs for Vanguard, which gives me a nice diverse outlook on the market for them to be my bonds instead. So the stock I did buy instead of EHang was Blackberry. Now, do you remember them? Now, Blackberry was a mobile phone provider, I think about 10 years ago. And to my knowledge, it just vanished. It didn't really appear anywhere. They didn't make phones anymore. But nowadays, they are more towards the software side of the world. And recently, Blackberry have picked up quite a few big contracts in the US. I believe they are working with the government and they are going to be involved in the electrical car side of the business, developing software to ensure that your electrical car can't be hacked. And also, I believe they've got some form of contract with Facebook to sort out their security as well. And because of that, it has rose as a stock quite a bit this week. Now, looking at a share price of £12, I still think that's quite undervalued. Now, what you can see, I currently own 5 shares in it as we stand, and that was the money I was going to put in EHang. But for this week, with the extra money we've got from depositing for this week's funds, I'm going to put £100 in Blackberry. I'm going to monitor it over the next coming week, maybe to the month, and depending on how well it grows during that time, this might be a stock I aggressively invest in. I do see it as an up-and-coming growth stock more than anything, and I do think it is very worthwhile in terms of money for the time being anyway, just to keep monitoring on it and just seeing what we can do with just continuously purchasing it. I believe purchasing it over a long period of time, rather than just putting £1,000 in now, can ensure that I try and sort of even out a lower buying price than rather buying it high and then it has a bit of a crash. So here we are, just picking up 10 stocks of Blackberry, and that will be for £93. And then we've roughly got about £110 left to put into other stocks. I'm just going to split that between 2 stocks. I'm just going to go through my portfolio to see what is best, and then I'll come and update you on what we're going to buy. So one of the other stocks I'm going to pick up is Royal Mail, and Royal Mail basically sort out all the postal work in the UK. And as we've moved into a consumerism where we're basically buying online, a lot of things is packaged and delivered, and we're not really going to visit shops or malls or stores anymore. But I think that the way that postage and e-commerce and haulage in that is a really big market, and I think it'll be a really profitable market for the future. And because of that, that's why I'm going to go and pick that up as well. And ever since I started buying Royal Mail, probably 6 months ago, it has done really well. It has had a really big growth spike, and it is probably trading at the highest it's ever traded at. And I can only see that growing. Same with FedEx. That's done really well this year, and I can only see that picking up as well. Amazon, of course, is the powerhouse, and it controls that part of the industry, but that continues to grow. I just think e-commerce and delivery is just going to be continuous for the foreseeable, or at least until we're all allowed back out to shop like normal. And the final stock for this week will be St. James's Place. This is basically an investment company, which I do use myself, and they are very good. And that's what we're going to invest in. I think the volatility of the market at the minute, it is really giving a chance for investors to make money off it. And I'm just going to invest in that. They do pay a dividend, albeit it's not the highest in the world, but they do provide me growth and a dividend at the same time. So the dividend which they do pay is currently 1.54%, which, like a lot of companies at the minute, is not the highest it could be, but it's a double whammy of the stock is growing quite well at the minute. It's pretty much at its pre-pandemic levels or a little bit higher, and it's giving me a dividend as well. So that's going to be the end of this episode. I believe in the next episode I'm going to clean my portfolio up a bit. There are a couple of stocks at the minute which I don't have a lot of money in, and I just can't see myself investing in the future. So you might get a midweek episode next week where I just go through a bit of a clean out of my portfolio, and along with a few questions on why I choose to do certain things with this and why I have certain opinions about the stocks I've got in my portfolio. Along with that as well, hopefully for the next episode, I'll be able to do that news segment, just going through what's happened in the world, any effects on stocks, and any future stocks which might be popping up which I can hopefully invest in. So if you have enjoyed the episode, please leave a like, and if you want to see some more content from me, please subscribe. We are trying to keep the minimum of 1 episode per week on this channel, and I'm hoping to grow it to hopefully 2 at some point during this year. But if you've got any suggestions, please leave them in the comments, and if you've got any stocks which you think either I'm doing wrong or I'm doing right, or if you've got any suggestions of stocks which are performing better than the ones in my portfolio, please leave the comments and I'd love to reply and see what we can both think about them. So yeah, hopefully see you guys in the next video, and I hope you enjoyed.